Today is Thursday, December 5th. I actually entered this trade by mistake. I have the 1-minute chart up on my dual monitor because I like to use TradingView to see when the candles close. Here on Top Step, I don't know if it's a setting, but I don't see an option to show the time when the candles open and close. So I like to use TradingView for that. I was waiting because I thought this was going to be a valid fair value gap to enter at. I was waiting for the candle to close to mark the formation of that fair value gap. But I didn't realize that I was looking at the close of the 1-minute candle and not the 5-minute. And so I entered this trade by mistake. This is not a valid entry for my strategy. I just wanted to come here and record this to be fully transparent with you. You're going to see that my balance dropped. I want to be honest and say, yeah, I looked at the wrong chart, looked at the 1-minute. So because of that, I'm going to go ahead and close this trade out. Personally, I like to see when the candle closes because I notice that there's like a last push before the candle will close. And I really do want to minimize my loss as much as possible. I'm watching the candle on the dual monitor for the 5-minute chart this time, and I'm going to close it out at the close of the candle. All right, we're 5 seconds to close. I'm gonna just close out. Took a $30 loss here, so you'll see my new balance is $50,022. Tip: make sure you're looking at the right time frame. Been studying the 1-minute just to get used to studying price. Watch how price reacts to certain order blocks and fair value gaps. Also, I've been looking at volume imbalances. That's why the 1-minute chart was up for reference. And I usually toggle between the 1-minute, the 5-minute charts specifically. I'm gonna wait to see if we do have a valid entry here, and I'll come back and film if we do. Today is Monday, December 6th. So we do see a potential setup here, and going to the strategy checklist. The first step, mark out 9:30 and 11:15 a.m. on the chart. You see here, we have 9:30 and 11:15 a.m. marked. So we could check that. Wait for a sweep of either the previous day high or previous day low. The previous day high was swept. If I just zoom out a bit here, you can see here that the previous day high was swept. We can go ahead and check that off. Next step, wait for a fair value gap to form that is in line with our bias. So because the previous day high was swept, we have a bearish bias. We do see here that a fair value gap did form here. So I'm actually going to go ahead and place a limit order for 2 contracts. My price here is 21577.57, and I want to sell 2 contracts. All right, so I have a limit order placed here. Comes close enough, I'll just cancel this limit order and market order. The trade has been placed, targeting 2R. So going back to the checklist, wait for a fair value gap to form that is in line with our bias. And since our bias is bearish, we do see that a bearish fair value gap did form within our time window of 9:30 and 11:15 a.m. So we can check that. And once an FEG aligned with our bias forms, place a trade covering the entry fair value gap and targeting 2R. So we do see here that I did place a limit order here at the fair value gap. If price comes up close enough, I'll cancel this limit order and just market order. I'll come back with an update once we see how things play out. So I am probably going to close out this position because price has traveled to R without filling my order. But I do want to talk through some thoughts. Something I noticed is a lot of the times price won't come back all the way to a fair value gap. And so that is why I do like to market order when price is near the fair value gap. Granted, I did watch price come up here, but I did think we were going to get a push. And so I did hesitate to market order, but price eventually came down and is now struggling to push back up. So I'm not sure if I'm going to get a fill by the end of my window at 11:15. Also did travel a good amount, especially for a no news day. So today, December 9th, there are no medium or high impact news. I was okay taking that risk because based on my back test, there were 2 trades that occurred on no news days. One of them won and one of them lost. So that's not a big enough sample size, just 2 trades, and it's 50-50. So I was okay taking this, but it did not get filled. The reasons why I was comfortable taking this trade, we did have a sweep of the previous day high. So my bias is bearish, and MNQ was heavily bullish last week. You can see here that this was a strong bullish move on the daily for MNQ. And so because there was a strong move up, I am expecting some kind of pullback this week. I feel more comfortable going bearish because we've traveled so high up after taking a daily swing high that price is bound to come down and pull back eventually. Yeah, I'm probably going to end up closing it out. Like I mentioned, I noticed that price doesn't always come back to the fair value gaps. And so that is why I market order. But something I need to consider is how close to the fair value gap should I market order? Like I should have a set number of points where I'll place a market order because I did watch price here when it came to this point up here, which is pretty close to the fair value gap. And if I actually move my order down to here, let's say I marketed here, this still would have been a valid entry because my stop loss covers the entry fair value gap. I would have been tapped into this trade and potentially it would have been a winner. We don't know yet because it's still traveling down here, but this would have potentially been a winning trade if I had market ordered here. But I didn't. So something I'm going to do is go through my back tested results and get an average to see how many points away from the fair value gap I should market order and have that set. So now there's no question of, oh, should I market order? Should I not? Will price touch this fair value gap? Will it not? Once I see that I'm a certain number of points away from the fair value gap, I will place that market order and accept the risk. That's something I'm going to look into this week. So just having that set number of points, like we see here, price is 567. And then my market order was at 577 about, so it's about a 10-point difference. So maybe if price is 10 points away from the fair value gap, maybe I could just market order there, but I want to make it set so there are no questions. I feel like I've just been watching winners go by without me, and it's like hurting me, but I know it is part of the game. Like, I can't get too emotional about it, but this would have won 2R. So, and because it did travel more than 2R from the original fair value gap, I am going to close it out. But yeah, just wanted to talk through that, and that's the next thing that I'm going to work on. So I'm just going to close it out. Yeah, it hurts. I feel like I've been saying that for like the past 3 trades, but also shows me what refinements need to be made and what can be done better for next time. And that is what trading is all about. Constant refinements and adapting based on performance. Oh, and I forgot to mention other observations here. Price actually reacted to an hourly fair value gap. You can see here, if I move to the 1 hour chart, see that this is an hourly fair value gap here that price reacted to and is now pushing down from. It didn't even touch the consequent encroachment of this fair value gap. It touched the beginning part of it, probably the first quarter before pushing down, and then coming back to 5 minute. I moved these time marks out of the way so you could see we swept 5 minute liquidity into the hourly fair value gap, followed by a strong move down. So this is actually also a 5 minute unicorn. So let me just draw everything out so you could see. This is a breaker block followed by a fair value gap aligned with the breaker block. And so after this fair value gap form, this is a valid 5 minute unicorn entry. So those are things that I consider also, because there's also another confluence is that this is a silver bullet fair value gap. So there's a lot of confluences and reasons why this could have been a good trade. We had a sweep of the previous day high, making our bias bearish. Price had approached a hourly bearish fair value gap and had a strong reaction, despite there being no news, which is interesting. And then if we drop to the 5 minute chart, we see that we swept 5 minute liquidity into the hourly point of interest or fair value gap, followed by a strong push down with a 5 minute fair value gap overlap. So this 5 minute breaker block overlapping with this fair value gap is a valid unicorn entry. That combined with this also being a 5 minute silver bullet fair value gap, and just with the expectancy of price to pull back after this strong bullish move up on the daily are things I would consider high probability. And even if I move this original order down, like let's say I did market order here, or even let's say somewhere around here, my stop loss still would have covered the entry for value gap, but we see that price would have hit 2R. Like I mentioned, I want to find an average number of points away from the fair value gap that I would like to market order at and just have that as a rule. Like if price is within 10 points of the entry fair value gap, place a market order. That way I can't convince myself if price is going to touch the fair value gap or if it's not. There's no question about it. Once price is 10 points away, I'm placing a market order and accepting the risk. Right before 11:15, another fair value gap entry formed. So I took it. Probably not going to be able to get 2R with this trade though, because I believe once price sweeps the previous day low, it's possible that price can now reverse from that point. So hopefully this trade plays out. But once price touches the previous day low, I'm just going to close out completely. But I do have my stop loss here. 37 points. I noticed another fair value gap, so I made sure to cover it. But once price taps that previous day low, I'm out. Let's see what happens. Disrespected the entry fair value gap here. There is a second fair value gap up here. I'm okay taking 150 as a loss. That's another thing I could look at during my back test is when there are multiple fair value gaps, what are the chances or how often do they win versus fail? Because I remember seeing them win, even if they're further down the leg, but selling very far down the leg is not good. That's lower probability. So that's also good to note here as well. And areas of improvement, I assume that price would reach for the previous day low, because I did see that happen during my back test, but that again is an assumption. Shows us what we can do better next time here with this strategy. If it pushes from this fair value gap's consequent encroachment and pushes downward, I'll stay. But once it wicks, I'm done. Oh, am I gonna get stopped out? All right, let's see, I'm out.
Order filled.
All right, $130 loss here. Yeah, it definitely disrespected it. I'm not staying. But yeah, New Balance, $49,887.86. So I did enter this trade because it does fit my rules, but it is a lower probability trade, and I wanted to go through why. Honestly, the point of this forward test for me really is to build a discipline, stick with my strategy, and to learn what the low probability and high probability setups are. Here you could see on the 5-minute that it failed to take this 5-minute liquidity and push down. So this is a failure swing. Instead, this actually created high probability, relatively equal highs for price to take. We can also see here that price has been very bullish on the daily chart. It did sweep the previous day high, and so according to the strategy, we are bearish, and there was a bearish fair value gap that did form within our session window of 9:30 and 11:15. We can see that the consequent encroachment of the entry fair value gap has been more than disrespected, so this is definitely a lower probability trade. What I would have wanted to see was price get filled and then respect the consequent encroachment and push down. This would have been a higher probability trade if there wasn't such strong bullish momentum. This failure swing also makes it lower probability, and the fact that price is already pretty much over or covering the entry fair value gap. I did want to come on here and record it because I am working on my discipline. I knew that this was a lower probability trade, and I took it anyway because this is part of me forward testing my strategy. So this is probably going to result in a loss. Yeah, this is what I mean by lower probability and high probability. So it would have been higher probability if we were at a POI, so maybe a higher time frame fair value gap. If this had swept and pushed down with a strong bearish move downward, what you see here actually is more of a bullish setup. So I'm actually going to go and close this out. So I closed out this trade for a loss of about $60. It's also helping me because there are a lot of reasons why this failed. Price on the 5-minute did not sweep this liquidity and push down, but instead swept this liquidity. This is bullish. So the 5-minute chart, it swept this liquidity and is now going to probably push up and take out these relatively equal highs. These are higher probability because this left high is higher than this high. But yeah, I wanted to film this more of a teaching experience for myself and for you, but yeah, this is definitely a lower probability condition. So if you're going to use this strategy, if you see a failure swing like this followed by strong bullish momentum, it's better to stay out of the market. But I also am working on getting comfortable with taking losses. So I'm taking this as a learning experience, but I also don't want to be so tied to winning and losing because that's what makes me so emotional. Like, I'm okay taking this $60 loss in order to learn for next time. I'm actually thinking about putting together like a list of high probability and low probability conditions, and this would definitely be on the list of low probability conditions. Strong bullish momentum overall, failure swing here. We did not take 5-minute liquidity. There was no strong push down. If anything, price took liquidity to move in the opposite direction. It's more likely that we'll be bullish because there's strong bullish momentum today. Higher time frame is screaming bullish. 5-minute, we swept this liquidity, and now there are high probability, relatively equal highs for price to take. Also, you can see here that price completely disrespected the 5-minute fair value gap. So that's actually my exit criteria to avoid taking full losses. You can see I did close out of the trade once I saw that price disrespected the consequent encroachment and just the fair value gap entirely. I pulled out for a $60 loss, but the original loss, if I let price hit my stop loss, would have been about $117 from what I remember. Yeah, if you're using the strategy, if you see a setup like this, probably better not taking it. My new balance is now $49,828.38.